Here's how to invest for beginners. I'm Shardani. I worked in banking for 7 years in London with the world's wealthiest, and I'm an energy healer, helping you master your money and energy. They don't teach you investing or personal finance in school, so that's why I'm here. So grab a cup of tea and let's go get started. First, why bother invest? Cash is great, don't get me wrong. Having cash in the bank feels really nice, but over time, your cash actually loses value thanks to inflation, where prices go up and the value of your money goes down. So the £100 you have today might only be worth 90, 80, 70 in purchasing power in a few years. That's where investing comes in, where the goal is to grow your money and ideally outpace inflation. Basically, it's how you make money work for you while you sleep. First step before we get into investing is we need to talk about your emergency fund. Your emergency fund is money you put away to cover emergencies. Your phone breaks, car breaks, or you lose your job. Emergency funds are not for holidays. Holidays are not emergencies. Or for buying the new cup trends. I don't understand this craze, like $35 for a cup, but anyway, moving on. General rule is keeping about 3 to 6 months worth of living expenses in an easily accessible high yield savings account. Personally, I prefer keeping 9 to 12 months minimum. Even the peace of mind from an emergency fund is worth it. So get on that. Number 3, types of investing. Now let's talk about investing. There are 2 types: long-term investing and speculative trading. Long-term investing is like planting a tree. You water it, give it sunshine, and forget about it. It grows over time, like years and decades. Then speculative trading is like trying to guess where the stock market will go. It's usually more riskier, more volatile, so for beginners, let's just focus on long-term investing in this video. Number 4, asset classes. When you invest, you can choose from a variety of asset classes, which is a fancy way of saying different types of investments, like fixed income, equities, commodities, currencies, hedge funds, private equity. If you want me to go into more detail on asset classes and these types of investments, comment below. So let's focus on the most common one, which is stocks and shares. When you invest in stocks, you're basically buying a small piece of a company. Think of it like becoming part owner of a business. Choosing an investment platform. So to start investing, you'll need an investing platform. It's like an online shop for buying shares. There are plenty of platforms out there, but some things I like to look out for in a platform are: number 1, access. Is there an app or is it laptop only access? Number 2, what's the cost? What are the fees? Sometimes it's annual fees, sometimes it's cost per trade. And number 3, what do people think about it? How many people are using that platform? You can look for platforms that offer accounts like stocks and shares ISAs in the UK or Roth IRAs if you're in the US. Sorry, Ireland, we don't have ISAs or Roth IRA equivalents investment options. So now you have your platform. What can you invest in? Here are just some examples, but make sure to do your own research. Number 1, managed portfolios. Here you hand over your money to the experts and they manage everything for you. It's perfect if you're busy and want to set it and forget it, but just be careful of the fees that they charge. Number 2, mutual funds. Mutual funds pool money from multiple investors to buy a mix of assets, usually actively managed by professionals. Again, look at the fees. Number 3, index funds. These track a specific market index like the S&P 500 and is generally seen as more lower cost way of investing in a broader market. Number 4, ETFs. ETFs or exchange traded funds. They're similar to an index fund but trades like a stock, so giving a bit more flexibility and generally seen as having lower fees. Number 5 is individual stocks, or you can invest in a particular stock or company that you like. But remember, it can be riskier because you're investing in just one company. Here's where number 6, diversification, comes in. Diversification is like having different toppings on a pizza. You don't want just one flavor. From working in banking, a useful way to diversify investments is across different asset classes, industries, and even countries. That way, if one slice of the pizza doesn't taste great or one investment doesn't perform well, you've still got other flavors of the pizza to enjoy, or you've still got other investments that are working for you. The magic ingredient to growing your wealth is compounding. Compounding is when your money earns money and that money earns even more money. It's like planting a seed, that seed grows into a tree, which then grows more seeds, you get more trees, and then the cycle continues. So the longer you stay invested, the more you benefit from this, as they say, snowball effect of compounding. Overall, just remember, it's not about timing the market, it's about time in the market. Stay consistent and let your money work for you. So that's a beginner's guide to investing. If you found this video helpful at all, hit the like button, bell button, and subscribe for more on how you can master your money and energy. See you in the next one, guys. Bye.